Hello, everyone, and welcome to the None of Our Businesses show and podcast roundtable roundtable segment, I should say. And we're coming to you from our new studio here. We kind of built this, bootstrapped it together in the garage of my house here. And as always, Charlie and AJ are joining me. They're gracious enough to come over here and hang out with me and do this. And we don't talk about him very often, but Ethan's here behind the desk running the audio, and Ethan's going to maybe get some B-roll of this awesome new studio for you later so you can see what we did here. And it's not done yet, so this is somewhat of a test. So, you know, you might, if the lighting or the sound sounds a little bit off or whatever, bear with us. We'll get it better over time. But anyway, we thought, hey, you know, we like to get as much stuff out there as we can, and we definitely had a topic burning in our heads this week. There was a tool, a document, a report, as you may call it, that came out from the company Bill.com. And if you don't know what Bill.com does, is they are a payable solution. I think they also handle the receivable side too, but they start out in the payable side, and what they do is they help companies automate their company's payables, and then they integrate with popular accounting software to streamline the accounting process for the company's payables. So anyway, this is not a plug for Bill.com, so I'm not gonna go too far.
Only if they want to sponsor the new our new podcast headquarters.
Yeah. I mean, they gave us an article here to talk about. They gave us a report here to talk about. So good on them. And it was pretty informative from my perspective, because it was the title of it was why do clients fire, and why do they then hire accounting firms? And Charlie and AJ here with me, we're not a traditional accounting firm, but we do have a consulting practice. Aside from creating this content for you all, we have a consulting practice where we serve clients with what we call CFO advisory and outsourced accounting. So we share a lot of similarities in business flow, and the things that Bill.com was talking about in this report, or the things that they found in this report, I think would be somewhat applicable to a firm like ours as well. So it was a particular interest to us. But anyway, in this report, they did some surveys of different companies that use accounting firms, of course, and asked, you know, what is most important, and they put out some data, and we all spent some time to take a look at it, and some of the things were confirmatory of what I've suspected was kind of at the top of clients' minds, and some of the results maybe were a little surprising. But yeah, maybe I'll just open the floor and see kind of what you guys thought about it.
I thought it was, like you said, I had always had in my mind, and we can go over some of the numbers here in a minute, but I always had in my mind that I thought things like responsiveness, customer relations, because at the end of the day, if you are a traditional accounting firm or you're not, and you offer alternative, like ancillary services to what a true like public accounting firm would be, you're a service-based provider. You're providing a service to anybody. Any kind of service-based, people have lots of options. This, accounting isn't new, or accounting services aren't new. Just like a mechanic or any of those other kind of, I guess, other service businesses, lawyers, something like that. There are lots of lawyers to choose from. So to distinguish yourself, you should distinguish yourself on, a lot of people call it brand, but reputation. And part of that, I think, is being responsive and a good agent of your organization, and being able to present and be responsive to clients' needs.
Yeah, and I think it's interesting because it's like one of those things where you would think that the biggest thing is like in accounting would be like having the right answer all the time, but the reality is, like you're talking about with responsiveness, is like sometimes it's a matter of being able to admit when you don't know the answer and you're willing to research it, and the person just wants to see that you are, taking their request seriously and really trying to figure out the right answer. And so, yeah, like you said, at the end of the day, it's a service business, and has a lot of things in common with every other service business.
Yeah, I mean, I think right on with that they specifically cited kind of what I'd call a 24-hour rule, that they asked the question in the way of if you don't get back to the client within 24 hours, then that's one of those service components that they might fire you over, kind of thing, if you're not responsive in that way. And I thought that was interesting, just because I've always tried to adhere to a 24-hour rule as much as I could. But I don't remember getting it from anywhere. I think it was just like a number I'd pulled out of like, yeah, it's probably reasonable to expect that I can get back to somebody within 24 hours in most cases. And so I always try to do it. So yeah, it was that was one of those confirmatory data points that they cited that exact same thing that in terms of what we try to do.
Well, and especially nowadays, everybody has a cell phone. I mean, you're carrying your email and you're like your communication device. No longer do you have to sit down at a desk and like log into email to get one.
Yep.
You know when you get an email and or any kind of other message or app that you're using. So it to me, especially nowadays, if somebody hasn't responded to me in 24 hours in a situation where I asked for help or something like that, I just assume that A, they're busy, or B, they don't want to get back to me.
Right.
Yeah.
I think sometimes people get stuck because they confuse responsiveness with actually having the answer.
Yes.
Right.
Yeah.
And so it's like, I think within 24 hours, anybody, like to your point, anybody can be responsive. But like if somebody's coming at us with a very like technical question or something that I really don't know anything about and it's going to require some research, that being responsive may mean saying, hey, I understand what you're asking, or maybe let me repeat it back to you to make sure I do understand what you're asking. And I actually don't know this, so this is the path that we're going to have to take to find this out, right? And that, so it doesn't necessarily mean coming back with here's the exact answer that solves the exact problem you're looking for within 24 hours. I think most companies and most people that we might work with, they appreciate that that's not always possible.
Yeah,
Right.
I would prefer that just from the standpoint of being a client, to just hear that somebody's willing to take the time, research, and admit, what they don't know.
Yeah.
And so, yeah.
Well, and I think many clients are very understanding. I haven't run across one that if you got back to them in that manner, like, hey, great question. Let me make sure I understand your question. Let's put a time on the calendar to talk about it. Or I need to know more information before I can give you an answer, or I need to research it a bit. That's a really unique and good question. Like, let me get back to you on that.
Yeah.
I think it's basic though, right? You just want your needs addressed in some way.
Right.
I mean, we're all consumers. So if I go to some place and something isn't right, I just want my needs addressed. I don't need a discount. I don't need any of the niceties about it. I just want whatever is wrong to be addressed.
Yeah.
Or whatever my concern is to be addressed.
Yeah, that's what it boils down to.
Yeah.
Yeah.
And I think that plays across, not just our industry, of course, but especially service industries, but across a vast amount of industries,
Yeah, definitely. And so, having that said, I think it was kind of interesting looking at some of the reasons that they identified as reasons why businesses will stop referring or fire a firm. And so, like, for example, one of their biggest reasons was that they said that not being able to work with real-time data was a big driver in why clients would then turn around and let go of an accounting firm. And that makes sense because obviously we're going to this age where everything is in the cloud, everything's real time and whatnot. But I just didn't foresee that would be one of the top reasons at this point that somebody would fire an accounting firm. What do you guys think about that?
Well, I think, it depends on what industry you're in. There's industries that move slower to adopt kind of real-time metrics, and there's some industries that, real-time doesn't mean much, especially like if you're talking about like huge contracts that take months or years to, do that.
Yeah.
Does the urgency of real-time financials really matter for that? If you're like a, one big project a year kind of company, whatever that is, then maybe real-time financial, like up-to-date, you can do it on a spreadsheet or whatever. You're much more concerned about other metrics that you're meeting. So
yeah, and I think it depends on what they mean by real-time data. I think where that question came up, and it was like this category of questions they asked in this study, which, any study like this is, even if the data is pretty robust, it's skewed by the type of question that's asked and the way it's framed, right? And so they had this category of questions that was in, that was really a lot about technology related type stuff, which makes sense because of the business that Bill.com is in. And so the context of it is interesting to think about where the context of that question is coming from, and then also the context that the people who answered it might have been taking it from, right? Because I think about it, in a traditional accounting firm, there's not a lot of integration between the accounting firm and the client, right? And so if you're doing like traditional work, whether it's tax or audit, the client has data in their files They then bring it over to the accounting firm. The accounting firm creates work papers in their files. The client may never even see. The client may, in many cases, never even see the vast majority of the work papers that are in the accounting firm's files, right? And then at some point at the end of an engagement, like at the end of an audit or the end of some kind of assurance engagement, like a compilation or review, or at the end of a tax return engagement, then the firm passes over kind of a work product, right? And so there's this very like. You think about it like in the video game world. You can probably help me out with this in the video game world, right? Because there's this difference between like real-time and turn-based games, right?
Yeah.
Is that the right terminology I'm using, right?
Yep, that's perfect.
Yeah, so it's like, well, most accounting firms are working on a turn-based system, right?
Yeah.
And I think most traditional services still are, and it's not all that practical that they would be working on a real-time system. I actually, from a tax return standpoint, I don't know many, if any, tax return firms that are working in the small business environment that actually work with real-time systems. Their big four firms were actually doing this. So like something I found out that was surprising to me but made sense later is that if you were like, let's say that you were Disney or AOL, well, AOL Time Warner is not a big thing anymore, but it was back in the day when I found out this. But let's say you were, let's say we'll stick
You're
with
dating
Disney.
yourself there, bro.
Yeah. Let's say you were Disney, right? So you're this big company, right? And you have a huge accounting department and a tax department in your own right. Like your tax department is probably bigger than a lot of small accounting firms by itself, right? If you're Disney, right? And then you work with some accounting firm, presumably a big four international firm who's doing your tax returns. It turns out that when the big four for a long time now, I would say over a decade, when they've been doing work with these really big companies, they actually do have real-time sharing information because there's a layer of collaboration between the inside tax department of large companies and the tax return tax return preparers in the outside accounting firms. So where that collaboration actually exists, the people have been doing that. That technology has been there. But I think my guess is that the context of this kind of question has more to do with accounting firms that are doing more outsourced accounting or bookkeeping or what they call client accounting services, and so that they're actually managing the client's kind of daily operational accounting data on a real-time basis, which means that having it available to the client in real time would be super important, right?
Yeah.
Right.
So I think that's probably the context that they were asking the question, and also the context that most people would be answering it. I doubt the context is that they're asking their auditors to provide real-time access to work papers as they're working on the audit. What would the point of that be, right? So,
Yeah.
Well, it does happen in audit though. Like when you're talking big four like that, and you have to do like a publicly traded company, there is live data sharing that goes on for
okay.
control testing
Okay.
and like expenditure testing and stuff that happens, throughout the year.
Hey,
like Deloitte
okay.
has somebody at like Nike or one of those type companies, like every day, 12 months a year. They have
Yeah.
somebody there that is reviewing data, doing those quarterly tests to make sure that the system's still working correctly.
Well, that goes back to something I've said before. It's like sometimes you've got tools trying to drive the use cases,
Yeah.
whereas, it turns out where the use cases are clear and there's a high level of collaboration because you've got experts on both sides of the table, this is already being done.
Right.
Yeah,
but
yeah.
it's like, yeah, I mean, how much real-time data do you need if there's actually nobody in the company to make use of that real-time data anyway? It would be one of those issues. I think when it comes to like the outsourced accounting piece, like for us in our service delivery model, it's not like we don't need special technology to do this because we're working inside the company and we're using their systems. So we're using their file drive, their share drives, their systems, and we're doing the work on their behalf in their system. So it's always available to them. And so yeah, I mean, I think, and so maybe in that way, we're checking that box. We're keeping data available in real time for clients and that's making them happy.
One thing that I think about is like, so I specialize, or I niche, I guess, in nonprofit. And one thing that a lot of nonprofits are a bit like accounting firms, are really slow adopters of like new technology. And so one thing I noticed with them is they hear about the innovations that go on in the for-profit world where like, wow, you have like a real-time like online, like look at your bank account. Like we want that. But a lot of people don't offer that kind of service. And for sure the accounting firms are very traditional accounting firms, I should say, are very slow to adopt any kind of new business model. It's one of the reasons why you opened up TCA,
Yeah.
and then we did a contract accounting service.
Yeah.
Because there was really no players in the market that were doing something like that, and we saw an opportunity to do something like that.
Yeah.
But I feel
Yeah.
like that's really the way that accounting firms are probably going to shift. Tax and audit will always be there in some function, but with AI and all this online stuff, you're going to shift away from like a bookkeeper, even maybe internal, like what I call busy work staff, like an AP person or an AR person or an expense person or something like that.
Mm-hmm.
It's going to move away from that, and you're going to be left with middle to upper kind of level jobs for those kind of positions.
Mm-hmm.
Well, and it may be kind of biased, but it seems like the article definitely agrees, because their number 2 reason was that it was why people will fire accounting firms was that they don't support digital business payments for AP and AR.
Sure, yeah,
which
go figure.
seems a little bit, yeah, exactly. Like in a Bill.com article, well, number 1 reason was they weren't using Bill.com is the problem. But I think that's true. I think what you're saying is right. The more and more that, accounting firms aren't getting on board with the newest technologies, or that firms aren't adapting them, then, it's going to lead to people switching to whoever will take the most, up-to-date technology.
Yeah, I think if you're doing that kind of work, like the outsourced accounting, bookkeeping, controllership type work, I think we've seen firms where they're literally old school, like they're downloading the data or getting the client's staff to prepare data and categorize it for them. They're sending it off to the accountant team, and then the accountant team is locked away in some office with a general ledger system that the client doesn't have any access to, crunching the numbers, and they spit out a financial statement once a month, and that's how they actually do it. And so yeah, I can see where actually having integrated real-time systems and the ability to process payments electronically and all that could be a competitive advantage if that's who you're competing against. I guess, maybe I'm naive, but I feel like there's a lot of people out there in terms of in the accounting world, at least on a nationwide basis, that are doing these kind of services and are doing it, electronically or whatever. So it seems like the folks we run into who are kind of doing it old school seem to be more the minority, but maybe they still have kind of a lock on a lot of the client base.
I might sound ageist here, but like I see, or maybe an experience based where somebody's at the end of their career, or like at a point in their life where, like I've been doing this for 40 years the way I'm doing it.
Right.
Why am I going to try and change my business model or my thing before 5 years before I retire?
Right.
Kind of thing.
On the client base, it probably feeds itself on the client base,
Sure.
because if you have, an accountant who's been working with the same clients for that long, chances are the clients are also in that same zone, right?
Right.
So they're on the same page together. They're like, neither one of us wants to change this thing.
Yeah.
Let's keep doing it the old school way.
From both sides, probably. Whatever you're doing is working right now. If it ain't
Right.
broke, don't fix it.
Right.
And from their point of view, from either side of the table, is seeing like, well, this has worked so far.
Right.
It's worked
Yeah.
for the last 25 years.
Right.
Nobody
Don't-
likes
Don't
change, yeah.
change.
Well, I had a question for you. One of the things on there they said is that it was like the last item they said that people might fire a firm for or not refer them, and it was doesn't handle international payments.
Yeah.
And I was like, I don't know what that means.
Yeah, you could interpret that a lot of ways. I think in the context of that list, it seemed to me like it was that that the firms didn't want to take payments from foreign sources, is how I interpreted it. Only
Yeah.
because when you put it up against what the other ones were, they weren't specific accounting issues. So it didn't seem like they were saying that the firm didn't know how to handle international accounting or IFRS or something
Right,
like that.
right, yeah.
It seemed more like, a transactional issue.
Yeah.
But
I guess that's the
yeah.
benefit of asking a broad-based question. You can interpret it any way you want.
Right.
Right?
Yeah.
It's like-
I don't agree with that, with those findings.
I think that like the report had that one in there just to make it like all the other ones are 5. We got to add like a 5th one,
Yeah.
or
they're,
like whatever it was.
adding
You got-
international payments to their
you got to say
Bill.com.
something international.
Yeah.
right?
Yeah.
No matter what you do, there's always got to be international thrown in
I
there.
think it's a new feature they're adding.
We're wide,
Right.
we're worldwide. We have one customer in India or something.
Right.
Yeah.
Hey.
Yeah. No, that's, right. Just to kick a dead horse, but enumerate the possibilities. Like, it's like you said, like, do they mean that our firm won't accept the international payment for our services? Or do they mean that we won't process international payments on behalf of our clients?
Yeah.
Or do they mean we won't account for international payments? Or all of the above? Like, I don't
Or we don't have the technical knowledge to be
where are
able
they
to
going with this? Yeah.
foreign translation currency.
And the truth is probably that 40 clients answered that question thinking different answers there.
Exactly.
Like some of them interpreted it one way, some did the other. And
Yeah.
the result is a meaningless survey.
Right.
But
At least on that point, perhaps.
yes.
yeah. I don't think it's meaningless in the information that they're conveying.
Sure.
Yeah.
Yeah. I'm
You
being
know,
a little harsh.
But yeah, definitely there could have been a better worded question than,
Yeah.
what do you think about foreign payments, sir?
yeah.
What? Like, foreign payments to what? You know,
I can't stand
It's a
foreign
loaded,
payments.
it's a loaded question. Yeah.
I love foreign payments. I don't like them. I don't know. What should I answer? No idea. What were some of the other numbers that they had here? Oh, these are here.
So now I switched it to performance reasons. So they kind of had two breakdowns. They had service reasons and performance reasons.
This one gives me a little bit of heartburn.
Yeah, this one. You know what it reminds me of? There was a study once on how many audits that they did, an audit of audits, and they were ramming this point home of how many of these it was the ERISA audits, or like a 401k audit, how many of them were wrong compared to how many were right.
Yeah.
And they were just, I got so sick of seeing the thing. I'm like, I do all mine right. Quit make me feel like we all do these wrong,
Yeah.
But this one gives me that same kind of angst when I look at it, because I'm like, wow, people, I can't imagine that this is kind of the level of service or the level of like performance that they put out there.
Yeah, for the listener. So, like, kind of the top thing that they said was that the 81% of people who fired a firm for performance reasons was because they were consistently making errors, which is just such a blanket reason. Like, that does sound awful. You would have to get rid of a firm if they consistently made errors or missed deadlines. So, yeah, these are just core things that
But it's so loaded in a lot of ways, because I would add a couple of words to that top line. Consistently makes errors. We could say consistently makes errors that we know of.
Yeah.
Right.
Or consistently makes errors that we got caught on.
Yeah.
Right?
Because somebody actually noticed.
Client believes they consistently made errors.
They believe they've consistently made errors, and it's an error that the client thinks that the client themselves will get caught. Because I see clients wave off errors all the time when they come to the conclusion that nobody will ever catch those errors, right? And so it's like, once in a while you get that client or that business operator who's like, we're doing everything perfect. Everything's always going to be perfect no matter what. And so then once there's errors coming through, whether they're material or not, that creates a problem for that. But that's pretty rare in my experience.
Yeah.
Well, I would just say that, like, the amount of errors that I found myself and then had to point out to a client are embarrassing enough to myself. Mm-hmm. But at the same time, I'm like, man, if they didn't notice this, and some of them were, like, especially in the beginning of my career, I'm like, ugh, I can't believe I made that mistake. But the amount of, and they thought that was just fine. The majority didn't blink an eye at what you were presenting them, And so if a client, for the most part, is noticing that you're making errors, you're right, that there's probably a lot more errors that they didn't see, under the hood.
Yeah. And I think, the other thing, which I don't know if I'm just over-interpreting the list and over-interpreting it, but I think what's not there is interesting in the sense that, okay, so I guess it's common sense that you want your accountants to not make errors, but what's not listed is a ranking of the clients, or a ranking of the accountants' professional ability, their expertise. Right. So they didn't ask this question, so that may be why it doesn't rank, right? But a question you could ask is, would you fire your existing accountant, or would you hire an accountant based on your perception of their expertise compared to others? Which is not exactly, which I think a lot of times on the client side, people conflate that with how many errors they make. Mm-hmm. But if you adjust that statement the way I suggested, if you adjust it to how many errors they actually catch the accountant making, right, then it's interesting, right? It's like, well, we'll fire an accountant because they make errors that we catch, but do we actually do anything in hiring accountants to evaluate their expertise ahead of time? Do we actually care about, is it like, do we care on the front end that our accountant has relevant and good expertise, or do we even want them to have the most expertise of the accountants that we could possibly hire, or do we simply care that they're sufficient and then they better not make any errors that we catch or they're out of here, right?
Yeah.
And that's the part that makes my heart, gives me heartburn, is that sensibility that the cynical side of me says, well, I feel like there may be kind of this undercurrent of, we actually don't care about the expertise as long, we're just going to assume the expertise is some level of sufficiency, and on the back end, if people make too many errors, they're out.
Right.
Yeah.
Well, I think you're right, and I think also too, it's a little bit. It depends on the person. I think it depends on the customer, right? Like, I would say that, like, we work with marijuana businesses, for instance. If you're in the business of marijuana, you better care about the technical excellence and like the legal soundness of your agreements. You better worry about like the accounting being done correctly, because the difference between not is losing your business, going under, not being able to deduct hundreds of thousands of dollars in expenses. Your risk reward versus knowing and having expertise in people you hire or not is high.
Yeah.
So
Especially
I think
at a time where that industry is flourishing, so it's like, now's the time to get everything right.
right. Or I mean, I guess it's the early stage of that kind of industry.
And I see a different bent in that industry in the sense, because on this point of, do you hire for expertise? I think when you're kind of in the more developed market, there is a fair share of companies that would kind of, I think they would say, not really. We think that, there's a range of accountants who all have about similar expertise. And so they really do, unfortunately, think of it more as a commodity. And so they don't necessarily hire for expertise. I think that happens in the more kind of developed industries and developed markets. I think the interesting pieces of the cannabis industry is that I have yet to meet a cannabis entrepreneur who didn't believe they had the best, like, super lawyer and super accountant and the best advisors ever. They all believe they have this nailed, right? The problem is they actually don't have a realistic way of evaluating that. So to me, that's kind of a different problem, is that they at least proclaim to desire expertise, but they don't actually have the right set of heuristics to evaluate expertise or not. And that part, I actually made a comment on somebody else's LinkedIn post today about that exact thing, because that's a hard nut to crack. I don't know how to solve that problem in every case when we're talking to people, because putting myself in the entrepreneur's I have a lot of empathy. I have a lot of empathy for the black box problem that they're facing. Right, they're growing in a business in a new developing market. It's complicated in a lot of ways. There's a lot of regulatory complication. It's reasonable that they don't necessarily have a skill set to evaluate the competency of their accountants or some of their other professional advisors, and so it becomes a black box. And so they're doing the best they can, and so you got to. If I were in their situation, not only can I imagine that I wouldn't be perfect at it, but I also think it would be very stressful for me to have to make a decision on something that I don't have a complete understanding of. And entrepreneurs do that every day. That's part of what they have to do. But I guess we have the luxury that in our own entrepreneurial endeavors as accountants, that part we don't worry about, because we have professional acumen there. It doesn't even come to our mind that we're going to hire the wrong kind of accountant or somebody who doesn't know what they're doing, because that part we've got nailed, right? We have other pieces of the business that we may not understand. Like in my own world, it's like sometimes the sales process is a bit of a black box for me, and I get frustrated with not fully understanding kind of how that should work, because that's not my area of expertise, in all ways. And so just going back to having empathy for that entrepreneur who has to make a black box decision on that, and thinking about, I'm always thinking about, how can I help alleviate their stress on this? What can I do to show them the truth about it, and get it so that they can actually feel comfortable that they have the truth? And because I can show them the truth, like I know what the truth is, I can show it to them all day long, but it's really that second piece. I mean, how can I somehow educate them enough in a short amount of time that they can feel comfortable that I'm telling them the truth, that I'm the one that's actually telling them how it really is? And I think that's, like I said earlier, that's a nut I haven't quite cracked. I don't think I have that solved, and I think that's a very hard problem to solve.
Yeah, I think you said the right word there. Educate them as much as they're willing to be educated about what's going on.
Yeah.
You know, because that is like the tightrope walk, right? If you just go and dump information in their lap and try to seem like that, like you're trying to profess, you know, this look at what I've accomplished kind of thing. So you know you're getting your money's worth, or that I have technical experience.
Yeah.
Or I know what I'm doing. As opposed to like, hey, I'm paying for you to do this service. Like, why do you keep inundating me with all this information about what you've been doing?
Right.
You know?
Right.
So, like, you have to give them enough so that they feel comfortable about what's being done.
Right.
But then you also can't overload them with unnecessary stuff, you know? I mean, like, or try to show them something.
Yeah.
Like a full set of, like, a full P&L. Why would any owner would ever want to see that? Like, line by line,
Right.
you know? So many widgets and whatever else that, you know, I don't care about bathroom supplies. Why, you know, what's my bottom line? What am I going to pay in taxes? What am I going to, you know, that kind of stuff.
Mm-hmm.
Yeah, so some of the other things they brought up that maybe are a little more traditional reasons you might think of is that if they found that people were disorganized or that they missed deadlines, that those were big contributing factors in why they would get rid of a firm. And that's what we would expect. I mean, that's going to be true in basically any kind of accounting, any kind of industry. If you were just not hitting deadlines, I mean, you know, that's a pretty low bar to set.
Can we just go right to the elephant in the room?
Yes.
Uses too much paper. I always say
only
that.
24% though.
Yeah, I know, right? Only 24%.
Yeah.
I only say that because the old firm I was at was paper, and I hate paper.
Yeah.
It gives me nightmares of paper. But I mean, I think it goes back to the thing that we were talking about earlier. You know, if you're that, you know, and maybe ageist to say this, but if you're close to retirement age,
Yeah.
are you doing stuff in paper? Why would this works? Why would I want to change this?
Yeah.
Yeah.
It seems so natural to us to not be using paper,
Right.
to be so paperless on everything we do that it's like, it's hard to see that as a competitive advantage at this point.
Yeah.
Right.
Yeah.
But I mean, I guess, you know, it's like anything else, right? We're creatures of habit and like, you know, of schedule, you know, or a routine, I guess.
Right.
So if you've been grinding the same routine for 25, 30 years.
Well, and as much as we need to move away from it, there is something that is a little bit, you know, I don't know. There's something good about looking at all the papers laid out and being able to walk your way through them and whatnot. And, you know, we need everything in technology and to be real time and that sort of a thing. But, yeah, I can see why there's still so many firms that try to use so much paper because it is still something that
It's easier to read
it's easier
and
to
like
read and,
tactile and, you
set
know,
'em
you
up
can put
side
your
by
finger on
side
it.
and,
Yeah, you know. I mean, I get it, but it's so inefficient in so many other ways.
Yeah.
I thought what you were going to say about the elephant in the room is about the item of being disorganized.
Oh, yeah. Yeah.
I mean, what do you guys? I mean, it seems obvious that if your accounting firm is disorganized, that would be a criteria for firing them or not referring them. But
Well, I think it goes back to the same thing about the errors, right? If you're disorganized, nobody should really know. You know, like if you're, you know, if that's just your MO at your office or whatever. But if you're so disorganized that your client notices,
Yeah.
then you got a real problem.
Yeah.
You know what I
It
mean?
takes something special
Like,
to do that.
Yeah.
yeah,
And I think it probably goes back to the same thing of like being responsive.
Yeah.
Disorganized, what does that mean? Did he not show up for his meetings? Is he not, you know, is
Did he
the
send me
responsiveness?
another client's work papers?
Right. Which
Right.
I've done that myself.
Can we
Yeah.
cut that part of the
Yeah.
podcast?
It's the most embarrassing thing in the world to do it. I mean, everybody's if
sitting
you've
the
worked
wrong
in
schedule,
if you've worked in an accounting firm, you've done it before. You've
Yeah.
hit send
Yeah,
to
yeah.
somebody different, you know. But it never feels good.
Yeah.
You know.
Yeah.
Well, and I think probably the more, I mean, those are the more like extreme and, you know, embarrassing moments that could happen. I think the more common things that clients perceive as disorganized, and not just perceive, but it is a form of disorganization, is when we ask the same questions more than once, or
Right.
you know, we don't ask questions at the right time, right? You and I were talking the other
Yep.
day about the timing of when you ask questions and how clients look at that. And, you know, there is this trade-off between not wanting to bombard a client with too many questions all at once so that they just shut down.
Yeah.
And yet not wanting to bleed out the questions for so long that they, you know, at the tail end of the project, they're still getting questions that they could have been asked at the beginning of the project. And they're wondering, you know, are they starting all over again or something? Right.
Yeah.
And so I think a lot of that kind of stuff is what plays into people looking at a firm as being disorganized. The elephant in the room piece of it, though, is that often that disorganization is in response to the client's own disorganization, right? And fair enough, though. I mean, they're hiring us as a service. We're supposed to be, as the accountants, the organized ones, right? But I think that there's a funny thing that happens when you're doing services for people, is that when you're serving people, you often end up starting to mirror them, almost as a way to try to provide better service, right? You're trying to relate to them. You're trying to kind of go at their pace. You're trying to kind of do things in their way and kind of work in their flow. And if they, as the client company, are disorganized, and you have that kind of approach of trying to go with the flow for them instead of kind of holding to your own line as being the organized accountant, I think that's affirmation that it's going to blow up in your face. You got to remember who, just because the client operates in a disorganized way. You talked about being late to meetings or not showing up. Yeah. Perhaps the client is always late to every one of your meetings, or cancels them at the last minute all the time. You would be foolish to think that means you can do that.
And the client might be that way, but you got to also remember that client felt it was necessary to get somebody else in there because he knew he wasn't getting it done. So that's why that happened.
It goes back to the responsiveness piece, is that responsiveness piece is a one-way road.
Right.
Your client that hired you and paid you money can take as much time as they want. And you should allow them to do that. You can spur them along and be like, where are you? Let's touch base, and all that kind of stuff, and give them reminders, gentle reminders to get you stuff. But better believe when they get you something, and the classic public accounting story. Hey, I got those documents to you finally, so I can get my return like this week sometime.
Right.
Well, it's going to take us a little while, but you try to be responsive about that kind of stuff.
Or any accountants working with each other back and forth when it's like, hey, I'll get you that next week. And then it comes to you like on Friday.
Right.
Or Friday night or whatever. Right. And then it's like, okay, well, and then I'll hear from you on Monday morning, right?
Right.
It's like,
great. I guess I'm coming in this weekend.
Right. Yeah. So I think, if you think about the business proposition there, though, is that, okay, clients have varying levels of organization or disorganization, as it may be, on their side. And as the accountants, one of the core values and services we are providing is organization, right? And so if they are highly organized on their side, then that makes our job a lot easier. Okay, great. If they're highly disorganized on their side, it makes our job a lot harder. And so there are going to be limits where sometimes the client is so disorganized that our processes and procedures just can't overcome it, right? And I think having a good sense of being able to identify that on the front end, so you're not kind of drug out and then it becomes your fault that deadlines are missed and things happen because you didn't identify ahead of time that it really was impossible for you to fix the situation given the level of disorganization that you'd be dealing with. That requires the experience of scoping your projects ahead of time and really thinking through that before you jump in and you essentially take on that liability. I always say, getting more clients is great. That's you want more clients with good fees. You don't necessarily just want more clients, period. You want more clients with the right fees and the kind of work you want to do, right? But every client you take on, you're also taking on a responsibility. And so, are you prepared to handle that responsibility from beginning to end, including the fact that they may, if they're not able to handle their parts kind of within your process or on the normal schedule that you would expect, that's gonna affect you. And you got to be on board with that when you take on that client.
Absolutely.
Yeah.
Or just your pricing, right?
Right.
I mean, that's the other thing is I see accountants that they treat every client like it's the same. So, when we look at the client with a spectrum here and we say, well, some clients are more organized and some are less, and they basically scope the project the same and they charge the same fee. And it's like, well, look, if you're going to work, 10 times as hard for this one client because they're highly disorganized, but you can still get it done. Yeah. Go ahead, take it on, but you probably, to make you feel good about it and to, and to make this whole thing kind of work out better for the universe, you should probably be charging them more than the client that comes to you who's highly organized.
Right. Yeah. Right. Because that's not fair to the, I saw it all the time, right? It's not fair to the business that's, organized, right? They should be getting a better rate from you or a better, because their product is easy to turn out than somebody that you have. It's like pulling teeth.
Well, and
Yeah.
they're realizing what their role is in it versus what
Sure.
your role is, and
Sure.
they're doing their part, so that you can do your part,
Right.
Yeah, and so there's a bunch of pricing reasons on this list too. They broke down into, okay, what are all the pricing reasons why a business will fire a firm? And so, like, a good example would be sending bills that are higher than anticipated, changes rate every time I reach out to them with questions, or no, charges me, I guess I should say. But yeah, so what do you think about that? Should a firm charge every time that a client reaches out with questions?
No.
No.
No, I mean, I don't believe that. That's not how we're structured.
No.
And
Yeah.
so I think you create too much friction for. I think it is counter to when accountants say we want to be trusted advisors,
Right.
but the toll is going to be rolling every time you
Yeah,
you
yeah.
pick up the phone. That that doesn't sound like you want to be a trusted advisor to me. So I think that to all of my accounting colleagues out there, you've got to get rid of the friction. If you want to build a trusted advisor relationship, you've got to get rid of that friction. Figure out a deal where you get paid what you're worth
Right.
at some point, but you don't want there to ever be you don't want a client to ever be like deciding whether they should call you or not based on economics at that moment
Well, and
when
like
they need you.
Yeah, and you can't like complain about a client being disorganized if the reason for his disorganization is fear for reaching out to you to know how things should have been organized if he had, not been afraid of the rate.
Right.
Essentially. So,
Right.
Yeah.
Well, and when I was in the public accounting world, when I was an auditor, I would always tell my clients, please call me if you have questions. If you get a grant or you want to know something, call me, because I'd much rather hear about it mid-year and try and give you some information and be able to steer you in the right direction than to come in and audit you and find out later that you did it wrong and I have to give you a finding,
Right.
or clean it up myself.
Well, the reason this happens from the accounting side, in my perspective, from the accounting firm side, is it's a little bit counterintuitive. It's because they are not actually charging enough fees to begin with. Right. So it creates this kind of nickel and dime philosophy of, well, we're charging a bare bones fee. We're trying to keep it as efficient and as low cost as we can for you, Mr. or Mrs. Client. And that's a premise that a lot of accountants operate under, is that that's what the client wants in all cases, is to be charged the least amount possible. And so they're operating under that premise, and then they're saying, well, and then they're saying, well, the way we're going to do that is by not assuming anything about what kind of service we're going to provide you ahead of time. We'll just wait and we'll do it as we go, kind of thing, right? And I think what we miss in the psychology of that is that that's not, in the abstract, any business owner is going to say, yeah, I want the best service at the lowest price. But at the end of the day, there often is more than just the dollar price on the table in terms of that client's needs. It's that service level, right? And so I think that I found that if you are able to provide them comfort that they're going to get a service level that they need, you can charge a higher amount than they might pay on average for other accountants overall, and then not charge them by the hour, and they're very happy with that result.
Yeah.
So yeah,
Value billing. I mean, it's ultimately billing based on what you're providing them at the end of the day, and so they don't mind a higher rate because they realize they're getting a higher value in that example.
Yeah, exactly. Yeah, and I think charges every time I reach out with questions. So absolutely, I think that's a bad way to become a trusted advisor. I don't think it's a bad methodology altogether, though. So I think I'd qualify this. I think, again, this survey takes it from a very specific context, I think, in terms of what kind of services you might be providing. Mm-hmm. We do value-added services where it is more like and so value billing in that way makes sense, right? But I do think that if you decide that your business is going to be commodity based and you're going to go all in on, we're just going to do kind of a commodity service. There's a lot of firms that can do the same thing. Mm-hmm. Our competitive advantage is that we're going to be fast and we're going to be cheap. I think it's okay to then, because the clients, you're clear about that value proposition. The client who hires that, they know what they're getting, and so I don't think there should be any tears about the fact that they're calling when they call,
charged, right?
They get charged. But let's be real about this: when you hire that kind of advisor, you don't call,
Right?
Yeah,
Right.
because you didn't hire them to call them for advice. You hired them to like fill out a tax return and be done with you.
To get through the bare
You
minimum.
want them once a year to process your data into a tax return. You don't want to talk to them the rest of the year. And if that's what you want as a client, then being charged, by every minute that they're working and no more and no less makes total sense, right? So it depends on what they're buying, and it depends on our side what we're selling and being honest with ourselves about what we're selling, because that's what I see a lot is a lot of firms who cannot be honest with themselves about what they're selling. They say they want to be trusted advisors. They say they're doing consulting and that they're doing stuff that can be value build, but in reality, all they're doing is commodity work. Mm-hmm. And so that's going to mess them up from a pricing standpoint. It's not going to work out. Or they're pricing in this old school way by the hour, and they actually are doing consulting and advisory work, and they're not organizing that in a way that's best for them. So I think self-awareness, using that thing that we talk about Gary Vee talks about. He talks about self-awareness, and I believe in a lot of that too, is that on the accountant side and the firm side, being self-aware about who you are and what you're selling is super important with regard to that question.
For sure.
Yeah, an alignment between the objective of what the customer is looking for, what type of preparer they're trying to get in that moment, versus what you're trying to bring to the market, finding somebody who lines up there. But so one of the other reasons in typical Bill.com fashion is to try to steer the discussion towards their services. But so one of the things they came up with was doesn't allow me to pay online as one of their big factors. And so, yeah, I mean, that just, Bill.com's really pushing that point home. But, yeah.
Give it the old time. Bill.com.
Yeah.
It's in every one of their questions.
The one that was on there that I didn't expect to see on there, and I don't know how to think about it or deal with it, is raises prices every year. Because I grew up in the system where it was like, look, you got to raise your price every year because your employee costs, inflation happens, employee costs go up. We've been living in a market with accountants in the Northwest, but I think this has been nationwide actually, where in the last few years, the wages and salary costs of accountants have just continually gone through the roof. So if you're operating a firm, your costs are going up dramatically every year. So yeah, I mean, I don't know how to take the client will fire us because we raise prices every year. I mean, how would you deal with that?
I mean, even regulation is changing every year. So even with the wages and inflation and all that stuff, the job continually gets more difficult. And so that's going on in the background behind all of that as well. So, yeah, it does seem counterintuitive that,
Well, I think it's important for your clients to know what kind of value you're bringing to them. And obviously, if you're raising your price every year, by too much, I think maybe this is, and this is customer centric here, that, wait a minute, I was paying, I just did this actually, I'm about to cancel the insurance for my homeowners association. I'm the president of the homeowners association, and they raised my insurance rate by like $50 to $100. It's only like $600 a year or something like that, but they raised it like $200 over the last 5 or 10 years. And I didn't realize it until I'm doing the financial reports and I'm looking, I'm like, well, what was it like 4 years ago? I'm like, man.
So maybe it's a significance that matters.
I think the significance.
It's 6% or something to cover average increases and living. That's not the big. It's when we're doubling prices or something that people are.
And then I'm thinking, I'm getting this discount for not having any claims or being such a small, easy policy. But I'm like, well, if it was a discount, you wouldn't be raising my. You just got a bunch of my money for 15 years in a row and haven't had to pay me anything.
See, that's the point, is that in that example, you don't feel that you're getting anything more from your homeowner's insurance each year. They're what they're bringing to the table isn't getting better every year. And you don't feel like the game of homeowner insurance is getting more difficult for them to administer, right? So you're not going to accept that as a reason. But in an industry like accounting, I think it's a lot more obvious that there is a lot of things changing, and that and to keep up with it takes a different effort.
Well, I can remember clients at my former firm, they would call and balk about 3% raises every 3 years or something like that.
Yeah.
And I'm like, are you kidding me?
Well, you know what I just thought of, and it kind of, to your point about things changing, is that this also flies in the face of a lot of firm strategies, because a lot of firms will say, well, we'll take the small business client or kind of that startup business and we'll do it at near break even or even a slight loss, because once we're in there and we become their trusted advisor again, right, those favorite words, trusted advisor. Once we're in there and we're their trusted advisor and they stay with us over the next, 5 to 10 years, our fees are just going to go up, right?
Right.
And I think what we're seeing here is the client doesn't really like that
No.
scenario,
Yeah.
right? But again, I think reasonably, if you're a growing company, your needs actually change, and it usually means you need more and more services and more complex services over time, and so you should anticipate that your cost of legal, accounting, all that stuff is going up over time, just like your headcount is going up as you're growing your business. So hopefully that's not the issue for clients when when we see data like that. But yeah. That one perplexed me a little bit in terms of, it doesn't perplex me obviously that, yeah, of course, if I'm the client, I would not want my prices to go up if I could avoid it, right? But it perplexes me of, okay, well, what do we do about it on our side as the service providers of the firm? I mean, one of the things I thought of is, well, if we are charging a good fee, if our services are highly valuable and we're charging a fee that is commensurate with that value, our actual margin might be pretty healthy to begin with. And so maybe that, as long as we are doing that properly, our pricing right, it might be similar to what I was talking about, value billing versus just billing
Right.
for every minute, that there's enough margin there that we don't have to raise prices. It's like, well, it doesn't matter if we lose, some small part of our margin because we didn't raise prices 3 to 6% that year, right?
Right.
It's not a big deal. And so maybe that's how we avoid that taint if that's a big issue. So yeah, it'd be interesting to kind of keep reading around and seeing where else that data point might come up to see if that's a thing that people are constantly worried about their prices changing every year.
All right, so what's this last one on here?
All right, so yeah, I think the last part is talking about why companies hire accounting firms, and believe it or not, it's not just the opposite of all the reasons why they fire accounting firms. They said that the number one reason why a company will hire an accounting firm is an expert in taxes. That is their primary determination, and so
We'll close on the
Caught me a little off guard.
podcast. We got one right here.
yeah,
We
here
don't
we
need-
go. You tell me.
Yeah, I mean, I feel again, it's like they're tackling it from a very specific context of the kind of accounting firm, right? So I think if your firm does a lot of outsourced accounting, then having an expert in taxes probably helps, right?
Right.
But if you're an audit firm, known to be an audit firm, or particularly firms that both of us, we've known different firms that are really specialized and well known for nonprofit auditing.
Right.
Being an expert in taxes wouldn't be all that helpful for that, right? So
Yeah.
Well, and even then, the tax preparation is so it's such a narrow kind of field
Yeah.
for nonprofits at $9.90. I mean, okay,
Yeah.
but how is that going to help you
Yeah.
offer services to them? It really wouldn't.
yeah.
Yeah.
But it does contradict what I was saying earlier, because I was complaining that they didn't highlight the use of expertise, and I guess
Right.
I mean this would be where they're highlighting that to some extent, is to the extent that they can evaluate that a firm has expertise in taxes, that makes this particular audience pool choose their accounting firm. That's why they hire them, is for that expertise.
I like the third one there. It provides a wide range, which I think
Yeah.
people don't think about too much.
Yeah, I think that's yeah.
I mean, well, it
I
kind
don't
of
know what
goes.
to say about that. Yeah.
Well, we've had this discussion before, and I don't think on the podcast, but you and I have had this discussion before, and for sure all three of us have.
Yeah.
Where we do a typical SWOT analysis in our business, and we look at competitors, and there's like that KPMG Spark, thing. There's these other large players that are moving towards this, like, to use like a food analogy, right? Like snout to tail kind of like accounting, where, you don't get to see how the sausage is made, but you get a lot of sausage, and you can get, whatever you want done, from simple bookkeeping and automated like program like QuickBooks Online to do your accounting, or you can get all the way through all those financial planning services and all that other stuff that like a full suite of offerings, I guess.
Which to me is really a commodity play.
Right.
And I think that's often, like, when I see this kind of stuff put together, is that I think our industry is confused on some of those points, because we, going back to that famous phrase, being a trusted advisor, we talk about, oh, we want to be trusted advisors. Oh, we want to do value added services. We want to have services that people will pay for our value. Oh, we want to do more consulting. And then at the same time we talk about the idea of, oh, we're going to be a firm that covers everything that your business might need, from bookkeeping to tax returns to financial planning for your owners, and right. That's, to me, those things are contradictory with each other in the sense that I don't think that I don't think it wouldn't be practical for the customer base to expect this, and I think the customer base doesn't expect this. They don't think, like, when you think about this in other markets, right? If you go to a certain store that you think can have anything under the sun that you might need, you don't think of that as a store that has the highest quality of a specific thing that you're looking for, right?
Yeah.
Like, and I mean, we can call it out. I mean, what would the store be? Like, the common example would be like a Walmart, right? You can go into a Walmart and it might have, a wide range of things, and pretty much you can get everything that you might need there across a wide range of possibilities, right? But when you're really looking for one thing that is of high quality in a certain area, Walmart's probably not your first thought of where to get that item.
You would go to a specialty store, right?
Batteries Plus.
Yeah.
Right.
We are sponsored by Batteries Plus.
Yes.
Well,
in
like,
the future, perhaps.
In the future.
I'm sure you can find like hubcaps at like Walmart, right?
Yeah.
But you wouldn't buy like specialty rims for like a race car.
Right.
So
right.
I think like necessarily that nose to snout or do everything under the sun or commoditizing your business, I think it holds a place in the industry. But I think like the great thing about, being agile about it is I think there's more carve outs for specialty kind of items, and I think you've seen the rise of that lately. And it did used to be maybe there was like 5 or 10, like even like 20 or 30 years ago, there's like 5 or 10 or 15 players in whatever market you're in. And then that's kind of it. Mm-hmm. It's the guys on TV and in the newspaper. But now everybody has a chance to be on TV and a newspaper. I mean, look at us. We're on YouTube, you know? Like, right. I mean, so I think the same is true for those service providers where, you can offer a specialty if you just want to serve, I don't know, if you want to just serve tattoo parlors or something and be an accounting service that focuses on that. You're more than welcome to do that.
Yeah.
And
there is a firm, and I don't know their name, so I can't give them a shout out here, but I've seen them. I had ran into them maybe at a conference once before, and then I've been seeing them on LinkedIn, and they specialize across the country in serving hair salons.
Oh.
And it's like, yeah, brilliant. You
right.
know, like,
right.
And they work out the best processes for the internal accounting for the hair salon, all the way through, the tax issues for the hair salon and all that kind of thing. So, yeah, I think that's a brilliant way to go. I've never been that specialized. I think being in Portland, Oregon, the nature of our community is it's hard to be that kind of industry specific and
right.
and be able to and really be able to build enough of a concentration of a clientele. So I've never been that specific with it, but yeah, I mean, I think it's just the meta of it. It's just the thing that always kind of I find ironic or just contradictory is it goes back to this whole self-awareness thing that I mentioned earlier, right? Of what are we aiming for here, right? I mean, so...
Well, and to really call that into question, I mean, I think it's kind of funny that we were talking earlier about being a trusted advisor, but the third reason is of why companies hire accounting firms is that they seem trustworthy, which I love. What they said is that only half of the respondents said that was the reason. So I love the idea that half of these clients are hiring.
We don't care if they're trustworthy or not.
The other half are like, they're not trustworthy, but it's going to be fine.
Right.
They're an expert in taxes.
So, yeah, we think they're an expert in taxes, but we don't necessarily trust them, so they may not be.
Yeah.
And they better not F up, because then that's when we're gonna, if they have errors, then we're, know. But we have no expectation that they won't have errors. They told us they wouldn't, but we don't necessarily trust them anyway. So we don't
have the technical ability to know if they're right or wrong anyway.
Right. So
nothing means anything.
Yeah.
Well, I think our industry. I think at the end of the day, our industry, especially at the CPA level, stresses so much to be ethical or to like pride yourself on, doing a good job. And I think a lot of this stuff, I think, are there bad apples out there? Sure. But I mean, I think as a whole, like our industry takes a really big swing at making it ethical and being responsible and being on point. And if there's one thing I think the industry could do better of, I think it's being responsive, being, kind of more mindful of the end customer.
Yeah.
Of what it is, and be more self-aware of who you are as a firm and what you're doing and what you're offering, what you want to offer.
Yeah. Well, I think, the flip side of that is that because our industry is known for it's integrity and the trustworthiness. And on the whole, most of the people that I've interacted with and had the pleasure of working with, all the people I've had the pleasure of actually working directly with, fortunately in my career, have been trustworthy people with integrity, which is great, right?
Yeah.
But I also think that what happens in that kind of environment is that it creates this environment where that's almost taken for granted. And so, the few dipshits out there that are actually not very trustworthy or lack integrity, they're really taking advantage in a big way, and they're getting away with it a lot often in a big way because it's so like unexpected. Like they're like doing something that is like so out of the norm and so unexpected that it's just not. It's hard to believe that that's what's really going on, and that's of course why state boards of accountancy will really go after people, and the IRS occasionally will go after professionals, and as they should, because of that exact problem.
And it's the whole reason there is a state board of accountancy, is to ensure that that's not happening. Really.
Right.
Yeah. So, some other common reasons: having in-depth knowledge of my company's industry, giving me proactive advice about my business. I mean, these are all just seem like reasonable things. I guess I would say the percentages are a little low for things like that you would think are core things that most people would say, yeah, I'm definitely going to hire an accountant who has an in-depth knowledge of my company's industry. But that wasn't the case. Less than half of people said that was their reason. So just kind of an interesting juxtaposition there between what you would think and what they end up really doing.
That rings true to me because I often get that question asked, and a lot of times I have to answer it negatively. It's like, no, I work with a lot of different industries, and I may not have worked with your exact industry before, or if I did, maybe I worked with one company. So I can't really call myself an industry specialist. And so I always kind of feel a little bit that punch in the gut when they ask that question, and then I have to answer it that way. But then when coming back to it, at the end of the day, I don't think it actually has ever hurt me. I mean, I think at the end of the day, I don't think I've lost an engagement because they were like, oh, he's not an industry specialist, so we'll move on. So, yeah.
Well, and like accounting sensibilities that you talk about often, but I mean, those are real. Like just the idea that you have a good position of understanding how accounting concepts tend to work makes it so that when you run into an industry specific problem, themes tend to arise that were similar and things you had learned in other areas. And so, yeah, I think it makes sense that you would have a business owner who's the expert in his industry, and then he's leveraging your accounting sensibilities, and ultimately together by collaboration you're able to figure out whatever the problem is.
Yeah, I think it also depends, like if you're on the client side, and it goes to the trustworthiness thing, is like, well, maybe if that particular accountant is capable of obtaining or acquiring the industry knowledge as they go, and they're not going to charge you more because they're doing that, and you feel comfortable that that's the case, then it should be okay. Like it should all work out, right? Because putting yourself in the client's shoes, like all things being equal, you would assume that you're going to get an equivalent level of service and correctness and all of that from an industry expert at a lower cost, because they've already made the investment. They already know how to do things in your industry and how it works with less time, right? Yeah. So I mean, I think as long as you're able to, like, in your engagement proposals, you're able to make up for any lack of knowledge there by showing that you're willing to make that investment yourself. I think that could overcome that issue as well.
Yeah.
That makes sense. Yeah. So another big one was whether or not they offer flexible pricing options, such as a fixed fee or monthly rate. Not much you can really say there. Yeah. So moving on.
This is why we don't leave, right? This is why they don't leave.
So, yeah, but it's like a double negative. It's like the client is unhappy, but they still don't leave. Why is that?
Right? Yeah. So, why unhappy clients don't leave firms? One of the big ones was it's too much work to switch, and I can say that not necessarily with accounting firms, but with other services that I've used over the years as being an operator in a business. I can attest to that. I think there is a little bit of like, once you have something going and it works and you are comfortable with it, there's this tendency to let sleeping dogs lie. Let's go ahead and just work with what we're comfortable with, even if it may be in our better interest to evaluate other alternatives. And so it doesn't surprise me that that's one of the reasons.
I can use myself as an example. I hate Wells Fargo. I hate them. But they're my bank. And the only reason I don't switch is because everything's already set up there. Mm-hmm. Every month I tell my wife we need to go somewhere else. but like I've been saying that for like 6 years, and I feel like they know it because they still give me shitty service. Like,
Yeah. Well, once they started opening all those accounts and everybody's names, they knew nothing mattered anymore after that. So you can do whatever now. And as soon as you leave, they'll just open a new account in your name. It's going to be fine.
The too much work to switch thing, I mean, the firms they definitely know that, right? And so that's part of the push a lot of times for them to provide you with multiple kinds of services is they're like, well, if we're your audit firm and your tax preparer and your part-time CFO and we do some of your bookkeeping and we provide financial planning to your executives and all of that, hopefully you're not going to fire, maybe you're unhappy with one of those services and you're unlikely to fire the one because now we call it being sticky. Now we're sticky because we've got this relationship with you at multiple levels and across multiple services. So yeah, for providers and firms are definitely aware of that and try to leverage that rationale as much as they can.
Yeah.
And I can speak from an auditing perspective, like for some reason somebody got in their head that you should switch audit firms every 3 years. It was in like some proposed rule for the SEC, but they never went through. So you would always hear about this, like, oh, we should do an RFP every 3 years. What people don't realize and what's really hard on a staff is when you switch somebody like that, even like a bookkeeper or something, you have to retrain that person.
Yes.
You have to retrain your auditor. If you get a new one, about how you do things, what you're doing, who does what, and walk them through all that stuff. That takes a lot of time too, and that's one of the things I'm seeing. That's probably the theme of that list is too much time.
Yeah,
Right.
yeah, that is definitely the case. They could all be boiled back down to that because they said, like, for example, I doubt we could find a firm with comparable pricing. Well, you could say with enough time, you'd eventually find that. So yeah, they all kind of go back to that. It takes too long to get a new accountant up to speed. I don't have time to search for a replacement firm.
Right.
Are you sensing a theme?
Yeah.
Yes. The only other one that kind of stood out there was I'd feel bad firing them, which, I don't know. What do you guys say about that?
I think there's some service providers that I see that really play on that, right? They put a lot of investment into personalizing that relationship and being almost a character with the people that they're working with and serving. And, they may provide very little actual substance in the technical service they provide, but man, people love that person and the character that they are. And so they, that's definitely one way to go.
That's one way to go.
That's why I cry every time a customer calls me. Just to really get the emotions.
I love you, man. All right.
So,
is that the end of the report?
Yeah, that's the end of the interesting parts of it.
Nice.
Talk about the demographic of the people who are responding, and it's a pretty varied mix of different firms, different sizes, different ages.
Interesting.
Pretty good mix about how many years of a tenure each accounting firm had with the clients who were responding. Some as high as 6 years, 3 to 5 years.
I think it was a good spot. No, it was a good article to bring forth for the firm and for us, and I think for the podcast.
Yeah,
too,
definitely something we're going to look at, and hopefully our audience gets something out of it. Yeah, we got a lot of meat out of that. That was good.
Yeah, it's a good article. Good thing to think about.
I think AJ wants to shut this discussion down because he's got a booty call tonight. So we can.
All right.
My wife would say different, but sure.
Okay.
You can cut that. Where that goes there.
AJ's sweating a lot now. All of a sudden.
That was off air. All right, well, thanks for watching. Make sure you smash that like button. Tell your friends about it so we can keep doing this for everybody. And we'll see you on the next one.
Thank you for watching.
Thanks for watching.